Hey, Sovereign Wealth Builders, Simon Dixon here, and welcome to another episode of Simon Dixon Hard Talk Live. Today, we're going to dive deep into everything that happened this week, as well as some overarching subjects. And one of those is the whole concept of weaponizing crisis. Why is crisis an opportunity for the concentration of wealth? And really, what I call the asset stripping phase. We're going to be diving into that in two parts today, as always. On part one, I'm going to be covering a topic that people, I think, are really confused by, can't really sort through what is actually happening, why it happens, and really what to do about it. And that's the subject of immigration. Now, I don't really want to discuss your views on immigration, whether it's a good thing or a bad thing. It's more around why it happens, what it means, and how it's weaponized, and how crisis is manufactured, and the implications of what you need to know to not be fooled by what they want you to focus on. And we're going to highlight that as well by going through a bit more of an update on the Lebanon conflict and what that means, and really in the broader context of where we are going on a journey. And this week we had a bit of a tech crash, and really it's not showing in the index because we're having this massive concentration of wealth phase, which is distorting the numbers. And so we're going to go through all of that today and highlight it with the events of this week. And then in part two, we're going to zoom out from the events that happened this week, and we're going to specifically go into the asset stripping phase. And this will be an interview that I did this week for Gold Republic Global, a YouTube channel. And I sat down with Alex Jordanov, and we did an interview together. It was approximately just under 2 hours where we went through the specifics of the asset stripping phase, how it's happening in UK, how it's happening in Netherlands, how it's happening in America. And we went through, the kind of asset stripping operations that you need to be aware of, so that when you hear things like a wealth tax, or you start to think our politicians are going crazy, or you see a regime change like we covered last week in the case of the UK, you know what the signals are and where it likely is that we're going next. So the themes of this week's show that we're going to be covering is I'm going to dive into what I mean by the tech crash, and beneath the surface and the markets and how to interpret it. Then we're going to be going through the immigration and demographic decline and why it is something that you need to be aware of, so that you don't get fooled into the traditional narrative. We've had some acceleration and some developments on this central bank digital currency and stablecoin part of the police and surveillance state. And how Lebanon and what it means and how it's changing the Middle East and what to look for next. Now we're kind of past the Iran phase. And then we're going to close off again with the latest updates in Bitcoin strategy and just digital assets in general, like this tokenized, you will own nothing and be happy, where the custodian owns the asset and you own the token. And we got some disclosures from the Trump family, which confirmed what would be no surprise to any of my listeners. We've been following the money for years in terms of his trades. But the central question that we're going to be answering is really that crises, they don't just happen. They become tools. Now, depending on where you sit on the spectrum, I believe that many of them are manufactured. But even when they're not manufactured, the environment is created to make it happen, and then they become a tool and a weapon. And then what you have to do in order to unearth it and follow the money is ask yourself who benefits rather than simply what happened. Because every crisis benefits somebody, and some have the opportunity to manufacture that crisis. And then you can look at the macro, the markets, and the economy in order to really figure out what might be the implications and where is this taking us. So let's start with the tech crash. And by crash, I mean that we are actually, one of the biggest stories this week was really not in the headlines. And the reason for that is because most people think in terms of indexes, the S&P 500, the Magnificent Seven, big tech. And really, the S&P 500 is making significant weaknesses when you read beneath the surface, because the politicians will say stock markets are at new all-time highs. But what is the real story behind that? And if you actually look at many of the former AI and tech leaders, they're already in a deep bear market relative to their all-time highs. And yes, we had a correction. And yes, I don't think this is systemically going to change anything. But what does it mean? It means that we are having every weakness in these markets. You get a higher degree of weakness in the smaller companies in that portfolio and more concentration towards the larger ones. Because the reason that SpaceX wanted to IPO at the $2 trillion, 1.75 trillion, was so that you can have money printing at the securities equity level. It's called an ATM. And an ATM means that you print some securities that are valued at $2 trillion, so that when a company like Cursor, which SpaceX immediately acquired using its equity, becomes worth less, then you can purchase it using SpaceX equity. And it dilutes the shareholders, and it's a cheap currency because it adds more value into the company, and it becomes like money printing itself. And so these large multinational corporations are able to concentrate more wealth by weakening the smaller tech companies and then using their stocks in order to make mergers and acquisitions. It's an old trick. That's what I used to do at the investment bank when I worked in corporate finance. But tech stocks are essentially way off their record highs if you look at underneath it. Now, if you remember, I was a very early seed investor or Series A investor in a later round in Coinbase. And I invested in many of the different Bitcoin companies, pulled it together at Bank to the Future with other investors. And we kind of inadvertently became the BlackRock of Bitcoin. Now, the broker that we built in order to work with the US, we ended up selling to Coinbase. And now Coinbase is taking meetings with Larry Fink and coordinating on Clarity Act. And they want to tokenize securities. So it's very, this is why, I talk about this business as a subordination vehicle. And when it goes in the wrong direction, you end up working for the financial industrial complex, a debate I have with many people about strategy today. And we'll return to that when we right at the end. But if you look at Coinbase from its all-time high, so we invested when it was a very low valuation as private equity. We held it for years. We made secondary markets on it. You can buy and sell. But eventually it goes public, and it went public at $100 billion. Now, from its relative to its all-time high, Coinbase is down 69%, 70%. What about Oracle, the backbone of much of this surveillance structure? It's down 57% from its high. What about Salesforce? 57% too. What about ServiceNow? Another 56%. Netflix, 48%. So half the value of its high. Palantir, the beneficiary of the police and surveillance state. And we had some very unhinged comments from Alex Karp this week, the CEO of Palantir. But they're off 48% from their previous high. And he's complaining about the AI infrastructure being too expensive, that he's having to pay for these tokens from Anthropic. And because these tokens are, hard to manage a cost, and they're getting more expensive with the increase in energy, Palantir was effectively saying, the AI companies or the other companies are giving their data to the infrastructure companies. They're making the models more beneficial while they're paying for it, and they're paying more than ever, and the higher energy costs are more than ever as well. And so this week, even Trump was talking about whether 5% of OpenAI, while Anthropic and Claude were kind of fighting against the government, and then the government said we got more regulations in order to decide which models appropriate for consumption. And we had Anthropic's latest model coming offline and then potentially coming back online once it's signed off from the government. OpenAI said, why don't we give the government a 5% position in OpenAI? And so this whole conversation went front. But remember what I said, you got to think about the incentives and who benefits, because regulations are how you prevent competition from coming in. It's a moat for the large ones that control the moat. And Peter Thiel was famous for saying he likes monopolies. So this isn't free market capitalism. This is creating moats for centralizing and creating these large monopolies. And by partnering with the US government, you get to engage in crony capitalism as well. And this is in direct conflict with what's happening in China, who's meant to be, the one that is blamed for all this stuff. They're open sourcing more. And so with these increased expenses in the US model, people are going for building their own open source infrastructure. And that's a very important thing that we will have to continue as a theme as you use more AI, because there's no getting away from it. I've been drafting my next book. I was going to be writing that in 2020. Now, using AI, I can do that where it can pull in all of my content and I can try and get that book out there, because I failed before. And that was when I got dragged into the Celsius bankruptcy and various other things. But anyway, there's no not using AI. You're going to have to lean into that. But as we think about our spectrum of sovereignty, we've got to keep thinking about how we do that in a more decentralized way, a more open source way, how we build our own infrastructure. Anyway, companies like Palantir are starting to do that. Now, isn't it interesting if they start using the open source Chinese model while building the technical grid, and we get this narrative of an AI pump and dump and bubble cycle? And we know that China can structurally rug pull that because of their model. But then Palantir is integrating with these open source models. This is the one global governance structure. So in everything you see, think about who benefits. Why are they doing this right now? And what is the overarching trend? Well, when you get these tech stocks like Palantir correcting 48%, and you get this immediate push towards, the problems with the model, and therefore you get a push towards open source. And then you get the US government saying we'll take a stake. And then you get the Chinese government, meeting with the tech executives like they did in Beijing. Then you can see that this is the technological industrial complex tick trend I've been talking about, with the global surveillance control grid. And underneath that, you have a multipolar world, which is the financial industrial complex, and they're using the military industrial complex, the MIC, FIC, MIC, TIC. FIC is using MIC in order to transition to a global control grid with TIC, with multipolar financial centers on the FIC side. So anyway, Microsoft was down 37%, Meta down 32% from all-time high, ARM Holdings in the semiconductor 27%, Broadcom down 26%, Marvell Technologies down 20%, Nvidia down 19%, Amazon down 19%, Alphabet, Google down 17%, CrowdStrike 15%, Apple 14%, Taiwan Semiconductors, TSMC, down 12%. So what's the key takeaway? Well, you can see that concentration. At the very top, down 12% off all-time high. At the very bottom, down 70% off all-time high. That means that we're getting more concentration into the larger companies within the S&P. So the takeaway is that the S&P 500 and the stock market at all-time highs and then coming back, it doesn't tell us the story. It's the market breadth continues to weaken. It's that we're starting to, capital is becoming increasingly more concentrated. And with 92% of stocks owned by 10% of institutions and individuals, we're getting this K-shaped economy within the indexes as well. And this is an important signal for the macro outlook. And this is really in line with this broader macro trends that we've been talking about. And so that brings us into, what does this mean? Well, a few weeks back when I was traveling, and by the way, I never say where I am when I'm traveling. I was in Morocco. I come back now and I can say that. Within these broader trends, you can see that you need a few things in order to make this transition that we've been talking about when you zoom out. One is you need to manufacture civil unrest so that your technology can be the solution. And we're going to use the example of immigration, how to weaponize and manufacture these crises. But you also need to think about the real demographics. You've got a pension crisis and you've got demographical issues where the replacement rate is below what it needs to be. And really, civilizations are moving towards extinction. And this is never more prevalent in the West and Asian countries connected with the West as well. And then, of course, you've got the China one-child policy. But these demographic issues means that you've got a lot less people paying taxes that need to support an aging population in a pension crisis. Now, how do you solve that? You either get more and more people in that are going to pay the tax, or you get less and less people that are going to be retiring on a pension. Think of COVID. Think of vaccines. Less and less people retiring on a pension. Think of immigration. More and more people in order to increase the tax base. But also, what about structural unemployment? If artificial intelligence and robotics are replacing those jobs, then who's going to consume the product if everyone's on a universal basic income and doesn't have a job? Is it just the ultra wealthy? Well, no, you look to the places where the demographics are still okay. You look and you see Africa, you see Middle East, you see Southeast Asia. And then you say, well, they're going to have to consume the product. And so if you're BlackRock and you're managing a portfolio, and if you're China and you're looking at your Belt and Road Initiative, and if you're sovereign wealth funds and you're looking at where to invest, you start to build up the countries that still have the birth rates, and you start to build the AI and robotics in the countries that have the declining birth rates. And then you manufacture a narrative to get everyone that creates this police and surveillance state so that you can have everybody that's on a universal basic income, not owning anything, asset price inflation, and being happy. I've got a universal basic income and I don't need to work. And that is the broader World Economic Forum agenda. And so what do you need to do in that transition? Well, to justify the police and surveillance state, you need to create fear. You need to create civil unrest. You need to take the techniques that the military-industrial complex had always done in the Middle East and all the war zones, and in Central and South America, and across Asia, and you need to bring it home. And that's what we're witnessing. This is the 10-year trend you need to be aware of and you need to be preparing for. So why are you being fed a radicalized version of what immigration is through your feed, through your algorithms? Well, the answer is because there are genuine, real demographic changes. But the civil unrest campaign is what's weaponizing it. Now, if you're going to push all capital, look at the case of the UK. Imagine you are able to have massive immigration, but you tax the wealthy. So now you get the millionaires and billionaires all going to UAE and leaving the country. And you take the immigrants that may have been a victim of either war in the case of, in some cases, or they were seeking better economic opportunity because you created a war zone in their country. And you take them out of the country that you're building and developing and into the country that you're asset stripping, which we'll be covering in part 2. And really, that is the case of what's happened in the UAE. Then you implement tax policy that encourages that behavior, and then it manufactures a crisis so that nobody owns their assets, and you concentrate all the wealth upwards. This is what you'd come up with if you were ruthless, inhumane, and just thinking in terms of realpolitik and a spreadsheet and portfolio management, which is what the asset management industry does when it's able to control the flows of capital. So let's look at immigration, demographics, and the economic consequences. This isn't in reality a story about immigration. You just need to look on YouTube or in your algorithm to get that. And they'll give you that story. And what do they frame it as? They frame it as you're either on the radical left or you're on the far right. And so they put you in a box and then they feed you the story. If you're on the far right, you're anti-immigration. If you're on the radical left, then you look at the war zones, you look at colonialism, and you say, we need to give this a chance. And then you also create narrative that really makes this type of radicalized version of you. So this isn't really a story about immigration. It's actually a story about incentives. And birth rates across the developed world remain significantly below their replacement level. That means that they're going extinct. And so, for some people, that's a thing. That's a problem. For other people, that's not a problem. I mean, I subscribe to humankind, and I can see the weapons and the tools. And I think that, humanity is humanity. And the further away I can go from these, devices types of issues, the more I can respect humans for what they actually are. And I also know it was a technique manufactured by war zones for divide and conquer. This wasn't always a thing. This was a wartime technique, just like religion was weaponized in order to justify war, in order to recruit armies. So it's basically the political response that we're witnessing if you just log into the alternative or traditional media that is manufacturing the radicalized version of you, is that all your problems are the immigrants' problems. And you have agents like Tommy Robbins that are paid by, Mossad or Israel in order to highlight those things. And their job is to do that. And then who are they sponsored by and who supports them? Tick nodes like Elon Musk, which came from South Africa and the apartheid system. And so you can look back and see how these tools and weapons and class and everything is used. Now, you can also make it real by immigrating prisoners, by highlighting racial tensions, by even supporting covert operations, and then connecting crimes to religious or racial issues. And we see that more and more and more. And then when you're on the far right, if you highlight these things, you then get called racist and all this stuff. And if you're on the left, you're called woke or whatever it may be. But you can see how everyone is always focused on the other. And when you're focused on the other, you get someone that power can blame. Because power doesn't want you blaming who's actually in charge. And that's the power dynamics that we focus on. And so the economic reality of this is much, much deeper. Why is family formation collapsing? Why are we getting a collapse of family values? Why are we getting a collapse of, creating a family, having children, getting married? Well, it's collapsed because there was a deliberate operation by the financial industrial complex to favor financialization over civilization. So what actually happened that led us to this extreme circumstance that we're in right now, where humanity's going extinct and there's only certain countries that have birth rates above the replacement rate? Well, housing became financialized. everybody turned their house into an asset that they could try and hold in order to have value that increased greater than inflation, because the banks create money as debt and housing became their mechanism for lending money in a Ponzi scheme where the central bank guarantees the system, socializing losses and privatizing gains. And so by financializing housing, homes effectively become an investment asset instead of a place to raise a family. And that is a slow trend. You'll notice that there's a bit of a trend in the Bitcoin community headed by Dr. Jack Cruz around Fabianism, and these different types of operations to slowly make changes that people don't notice. We'll get back into that with the Bitcoin side, but this was one of those, and so as a result of that, having a debt-based Ponzi scheme, a monetary system where the house became an investment rather than a place for bringing up a family, wages decoupled from productivity. And so people moved into the speculative market more. And if you were relying more upon your labor and had a job, then you were getting further and further into the wrong side of this. Now, if you were speculating on assets, then you were either getting bad investment where you went down the ladder, or you were able to beat the cycle because you were dollar cost averaging, you were investing, you were increasing the amount of assets that you hold every month. You weren't saving in a bank, and various other things. And so what happened there is that the gains went to the house owner and the asset owner, and wages never kept up with productivity. So the person could have become more and more productive, but wages didn't catch up with that. And AI is the perfect reflection of that as well. And so when wages decouple from productivity, you don't get paid more for your increase in productivity. And therefore, this cycle, again, decouples. Healthcare became financialized as well. And so privatizing the healthcare system, having it where it was subsidized through private means. Healthcare became a tool where you could sponsor the university system in order to get the research you needed. And then you could have the solution, which is a subscription model, where you want people continually purchasing drugs. So you manufacture a health crisis. You manufacture events that lead to lots of drugs, vaccines, therapy, whatever it may be. But you financialize and securitize and tokenize healthcare. Education becomes basically just a debt finance mechanism. So you have record student debts. They start as a collateralized debt obligation. You get your student credit card and you get your student loan. Then you go out and get a job, and then productivity is not catching up with wages. And then you financialize your house and you use your house as your primary vehicle, which means you are now a collateralized debt obligation for 25 years. Childcare became unaffordable. So it no longer became, think about all these trends together. And so family formation basically became economically irrational. And so if somebody is looking and calculating, and imagine that they end up marrying the wrong person, end up in a divorce, that takes them back financially. And so when you have all of these different trends together, you get wealth inequality, you get lower birth rates, and you get the situation that we're in today. And so how do you try and factor that into the equation when you also have a pension crisis, people are retiring, and there's not enough tax base? Well, you try and supplement the tax base with immigrants. And then you also make it where you think that it's the immigrant that creates this problem because it's the thing you can see. And the reality is that the immigrant didn't take any of these problems. They were in their country and they were economically destroyed by the MIC. Their country was financialized by the FIC. And they ended up in a police and surveillance state by the TIC, where they needed to migrate either to escape a war zone or look for economic opportunity by design. And so the countries that were built on immigrants, suddenly we get these change in demographics, which increases the numbers. And then you get media narrative that will weaponize that in order to point at the other at the same time as Fick, Mick, and Tick, making your life worse and worse and worse through financialization, unless you gave your money to them and they managed your assets. And that's how they ended up controlling the capital flows. And so it was asset inflation that caused this ridiculous situation where civilizations are going extinct. And housing policy was the mechanism for making sure that happened. And monetary policy was the mechanism for ensuring that that happened. Wage suppression ensured that it happened. So you get that K-shaped economy. But immigration becomes the political distinction, the thing that you can point to. And then you can use that in order to get your politician in charge. Nigel Farage, in the case of UK, we covered this last week in the regime change, or whether it be Rupert Lowe, and you create a populist narrative. And you look all around you and say, my people are not doing well. We can't afford them as well. They can't afford me. And that's the police and surveillance state that you need. And most people fall for it, hit hook, line, and sinker. And so really you get anger directed to that way or sideways, or you look upwards to the politicians, but who are the politicians bought by? They're bought by the lobby. And so rather than seeing actually who's in charge in the fake democracy, you point upwards towards the government and sideways towards your fellow humans. And immigrants becomes the one that's obvious and visible, rather than actually recognizing that these are systemic trends. And you need to make sure that you play the game of money better and get on the right side of these trends. And so workers fight each other and they become more ruthless for the job. The financial structure completely remains largely unquestioned. People are, complaining, shouting, regime changing, blaming the politicians, the ideology. It's communism, it's capitalism, it's socialism, it's immigration, it's the women, the men, all these different things. But really, it's just that you're looking for an other because you haven't figured out how to beat the game. And those in charge are largely unquestioned to a big degree. And if they are questioned, you kind of put it in a communistic, socialist, radical left. When really, what system do we have in the West? Well, we have socialism for the wealthy and the largest multinational financial institutions through socializing losses and privatizing gains, and capitalism with a rigged game and rigged monetary system for the poor or everyone else, which pushes out the middle class into the extremes. You either get corrupted by the system and start preserving, which is where many of the boomers are in right now, and defending the system, or you become increasingly more radicalized, pushed out of the system, more in debt, more subordinate. And that's the spectrum. Now, what we talk about in being sovereign is making sure you're the person that beats the system, but in a sovereign way, so you can still speak out against the system, which is what I'm trying to do here. But the long-term consequences is that you have falling birth rates. This is predictable. This is inevitable. This is, in fact, guaranteed in this financialization and monetary structure. And then that leads to labor shortages because people are on benefits. Without that, you have the AI side. Then you have pension pressures, as we said, as an aging population now need to be looked after on their pension. And then you have larger tax burdens. When you have larger tax burdens, you end up in the situation that Europe's in right now, the situation that UK is in right now, the situation that Canada, Australia. Look around you. And what do you have as a solution? You have increased surveillance leading to a stablecoin and CBDC standard integrated with pre-crime social credit scores and artificial intelligence in order to build out a police and surveillance state. This was very, very predictable. You can just follow the flows and understand that. And that leads to expanded state control, but don't stop there. Who is the state controlled by? In the case of China, it's the top of the chain. In the West, it's the MIC-FIC-TIC, so it's the financial industrial complex. But you get plausible deniability by blaming the government there, which is the piggy bank and battering ram. You know, their job is to print the money and concentrate it over. Their job is to take the blame. But then you have a shadow leadership, and anybody that points it out, like me, you get called a conspiracy theorist because I'm pointing actually factually who's in charge and the structures by which it happens. And then you get people that are not and then you get, if somebody points it out, you give them a name: communism, socialist, radical left, woke, anti-capitalist, whatever it may be. And this is the psyop, and we're all contributing to it to some degree. I contributed it before I understood the system, before I had the breathing space to follow the money, escape the system, and figure out how this stuff actually works. And I'm still learning, and I share it with you. But crisis becomes the justification for more centralization. And we're now hitting peak centralization. And then this is when you realize that your ideology was in fact manufactured. And then you question, where did I get that ideology from? Did I inherit it? Was it manufactured for me? Or did I actually consciously think about that? Was I radicalized into it? Is that really what I think? Or am I just parroting a narrative that was indoctrinated into me, and I've lost all my ability to critically think? And I would argue that most people are in that position, that most of what you believe in is not actually, it was downloaded like an operating system and installed into you through this system in order to turn you into this collateralized debt obligation. And our job is to break the cycle, to break the narrative. So in conclusion, we don't want to think about immigrants in terms of the narrative that turns you into a tool for the police and surveillance state, which is where most people are. Immigration is one of the most effective political weapons because it redirects attention away from the structural cause of the demographical crisis, and it makes you blame the political system rather than understanding who owns the political system. And so the question shouldn't be, how do we stop immigration? Because that's the symptoms. They want you changing from left to right, open borders to closed borders, far left narrative, far right narrative to woke left radical. They want you doing that. They want you to change that because that creates the environment that leads to the technocratic police and surveillance state that they already drafted the legislation for. They just need to manufacture the crisis in order to make it a thing. And the question should be, why is the economic system made difficult for the people to build families if families are required? And in answering that question, you'll get inevitably back to the types of structures that we cover on Simon Dixon Hard Talk. And then you realize civil unrest is the product, not what they're trying to prevent. Because surveillance and the police state and the global control rails is what they actually want. And that is monetized by TIC, who is a subordinate to FIC. And they can control MIC in order to do that. And so what tools do we need? Well, CBDCs, central bank digital currencies, privatized version, stable coins. And you change the future of money. And that's exactly what we're going through and what we've been covering over the years. And in fact, what I wrote about in my book in 2011, Bank to the Future, Protect Your Future Before Governments Go Bust. It is monetary reform that is driving the culture, and it is the culture and ideology that is manufactured because people aren't selecting their own. They're just downloading the operating system. And so what's happening in the CBDC versus stablecoin side this week? Well, remember the long-term narrative that we've been sharing and by following the money, that you've got the privatized system in the US and you've got the central bank system in Europe that's following the system that was integrated in China. And so that US versus Europe narrative is the strategic tension. Read books like Operation Gladio by Paul Williams to understand strategic tension, divide and conquer. And so then you have a US capitalist narrative versus a European socialist narrative. You build both systems into the same control grid, which go back into the Bank for International Settlements on the CBDC side, and then via the Fed into the stablecoin side via Genius Act. And the Fed is one of the nodes or the largest shareholder in the Bank for International Settlement system. So they all come home to the same system, which is working with the system that they can't co-opt, which is the PBOC, nationalized central banking system. So those integrations is what we've been covering. But never more, if you want to concentrate everything up into the US stock market and the US tick, then you use Europe as a tool. You asset strip it, like we'll be covering in part 2. And so US and Europe are kind of split on this CBDC versus stablecoin narrative. The United States basically moved to block the government-issued digital dollar. Or it's not a government-issued digital dollar. It's actually issued by a central bank. And the central bank is owned by the banks. So that's a privatized central bank digital currency. So that's an obfuscation in itself because it points back to the privatized system. So when you have already in America FedNow, which is a CBDC at the wholesale level, and you give a narrative that you're banning CBDCs at the retail level, but you introduce a legislation that allows you to do it later, you're just delaying the adoption through stable coins to rug pull it into a CBDC later, but it's the same thing. It's the same system. Genius Act pulled it all together. And Europe is moving in the complete opposite direction. They're just covertly saying, we'll do the CBDC. So the ECB continues to develop the digital euro. The European Central Bank is a shareholder in the Bank for International Settlements, and European Union was a project of BIS, which is the World Economic Forum, United Nations, various agenda. You will own nothing and be happy slowly over time. So the legislation is expected this year. They were meant to beta test in October last year, which they did. Then you get the legislation this year, and the pilot is expected on the retail side in 2027. So the political launch and the actual penetrated launch all around or compulsory side of it is expected in 2029. That's the complete roadmap. The bigger picture is that the US isn't rejecting digital money. The US is choosing the private digital dollar, and they're trying to concentrate it upwards. And so they're choosing who the winners and the losers will be. And we got a massive development now in open transactions that we'll be covering as well. But Europe is choosing the public digital money via the European Central Bank. And these are two very different monetary models, but they all are emerging and point back to the same thing. And so stablecoins wins in the case of digital stablecoins. The dollar at the moment, there's approximately $317 billion in stablecoins. But in the case of euros, there's only about $1 billion. So they're worlds apart in terms of adoption and penetration. And the reason why this matters is because the US is exporting digital dollars via private markets. Now, they are, so this is where the important part. So the privatized dollar system is on a stablecoin standard. Now, across in the multipolar world, what did they do? Well, BIS launched mBridge, and mBridge is a network of CBDCs. Now, a CBDC works outside of SWIFT. So you have Europe being controlled and subordinated via the ECB into BIS and the Fed system, which then socializes the losses and privatizes the gains into the US stablecoin. But it doesn't get global adoption into multipolarity because countries have their own CBDC network tied together via Enbridge. And so you get as much dollar stablecoin adoption to build the privatized stablecoin, mainly and most likely across Central and South America using MIC. You vassalize Europe into the ECB and the European Union, and then you centralize that tick control grid across the US private interest and try and partner with the CCP and China in that integration. So Europe is trying to preserve central bank control while stablecoins are becoming global dollar infrastructure. And BIS comes out and made a warning this week. So what was the BIS warning? It was warning against the digital dollar. So central banks warn that stablecoins are helping the dollar win, basically. And so BIS's view is pushing for CBDC adoption. The Fed system tries to make everything in stablecoins programmatic, and you have good cop, bad cop, strategic tension in order to manufacture the civil unrest to get the crisis. And remember, we've got this AI bubble, which is funded by private credit, which goes into banking, which is the too big to fail, socialize the losses, privatize the gains, move into QE, on a national security narrative of AI for national security because China might win. And so we got that's driving the bubble with the too big to fail narrative that socialize losses, privatize the gains. So the Fed can rug pull the whole system when they want. And that is for BIS. And BIS is driving the adoption into CBDCs. So the CBDC view or the BIS view is that stable coins are now replacing fiat currency and that you need to worry about dollar adoptions. And the dollar is, stable coins are accelerating dollar adoption because the ECB has $1 billion of stable coins and America has $317 billion. And Genius Act allowed the $3 trillion of reserves held at the Fed to be used as collateral by those that have banking licenses in the Fed Now system, which is a wholesale CBDC. So during financial stress, the BIS is saying that households will flee into the dollar and stable coins make that easy. And so USDT issued by Tether, which I ended up, for full disclosure, Bitfinex, when I was investing early, it's the partner company of Tether. And I sold my position in Circle now because it went public, but I was an early investor in Circle when both of these, Bitfinex and Circle, were just Bitcoin companies, but slowly got captured by FIC and then went public. So I was able to sell my shares and try and resist against those movements. But they're making that process the infrastructure. And so do you want Tether and Circle to be the leaders there? Or is there an alternative plan? And that's where Genius Act comes in. And so the implications are that the BIS is stating is that stable coins reinforce dollar dominance. And that is something that the BIS is warning people against. So dollarization is becoming easier and emerging market currencies are becoming more and more vulnerable. But that's where the CBDC infrastructure comes in. And so you're playing both sides here. The BIS warns that the dependency could last for years. And it will last for years in the dollar. But at the same time, the FIC is doing that dollar weakening operation. The Iran war strengthened it. I expect it to return. And so what comes out at the same time as the BIS this week, or the BIS warning? We got a new announcement of a stablecoin infrastructure in the US called Open Stablecoin Standards. And so this Open Stablecoin Standard had a bunch of members that have all got together and said, we need to support this standard. And it was Visa, MasterCard, Stripe, BlackRock, Coinbase, and more than 140 companies to create a new stable coin called OUSD, OpenUSD, open source. See the shenanigans that are being played here? And who wasn't invited? Tether and Circle. And so there was a big correction in the Circle share price. Now we'll see what's coming. And this is a very interesting story to watch. But allegedly, they're opening an open stablecoin standard where all of the members are plugged into it. And here's the interesting thing. If a business uses it for payments as a merchant processor, the business can receive a part of the earnings. There was nothing around whether the customer receives it, which is how stablecoins were potentially, if it wasn't for Genius Act and Clarity Act. But now the businesses can receive a part of the earnings, a part of the debt, a part of the treasuries. And so stablecoins are increasingly becoming payment infrastructure if this open OUSD becomes the thing. And so the bigger picture is that stablecoins are kind of moving from, crypto products and now digital financial infrastructure into programmable rails, programmable money. At the same time as the beta test of the CBDC happening in China, at the same time as the resistance movement against the dollar and SWIFT being done via CBDCs and the Enbridge product. And so that's all I wanted to cover on that side. Now, let's take a little bit of a look at what China's doing right now. So remember, you have IMF dollarization, which is the legacy system that's being decolonized into a multipolar world. And China's Belt and Road Initiative is decolonizing and unwinding the post-world Bretton Woods system by World Bank and IMF. So we had an announcement this week with China and Sudan. And Sudan's one of the war zones of the MIC. Now it is being, held up by Gulf deciding what's going to happen with Sudan. And China decided that it's going to be canceling approximately $50 million of Sudan's debt. And so this is effectively a write-off of 4 interest-free loans. So there were 4 interest-free loans, and China's deciding to write them off. Now, China doesn't do that for nothing. This was 200 million yuan in new grants. And what happens with those grants? Well, they'll be invested in energy infrastructure dependency, water infrastructure, and agricultural infrastructure. This is why these types of things happen. Now, so far, China hasn't been using MIC as a subordination vehicle. It has been using FIC, or its own internal financial infrastructure. And Sudan has the gold trade route with the UAE, and you have this UAE funding one side of the civil unrest after America destabilized it, with Egypt and Saudi on the other side. And my thesis has been is that once you get past the Iran war, then you get into Lebanon, then you get into Gaza, then you get into Sudan and Syria, and everything will resolve itself into the multipolar world order to get that MIC exit from the region. And so we're seeing this restructuring Chinese investments, and the Chinese nationalists, the CNPCC is going to have more and more operations across the region. And so this is really the bigger picture. China is continuing to expand its influence through finance rather than military intervention, which is why we're getting these changes right now, which is why we got the, what I call the theorized closure of the Strait of Hormuz and the theatrical war in order to regime change across the region and manage this transition that I've been covering for a long time. But anyway, China's getting into more and more debt restructuring, and this means more influence over infrastructure, more influence over investment, and more long-term geopolitical influence alongside the Gulf countries and the sovereign wealth funds, which is the intermediary between the FIC in the West and China in the East. And this is the transitional geopolitics that we're witnessing right now, where monetary in the region that America doesn't dominate is increasingly being replacing the military forces with financial integration and regional stability. The places where America dominates still can have the civil unrest. That's internal civil unrest, war in Europe with Russia, and more covert operations in Central and South America. So capital is replacing proxy warfare, with the exception of the West. So Lebanon is one of the ones that we need to keep an eye on right now, because it is one of the clearest examples of this shift. So, let's have a little look at what actually happened this week in terms of Lebanon. But before we do that, understand the structure in Lebanon. So Lebanon was manufactured into a civil war, and then it had the IMF takeover in disaster that led to the destruction of dollar reserves, which led to the money printing of the Lebanese currency, which led to the shutdown of banks, where all the Lebanese were shut out of their savings. That created an alternative resistance system within Lebanon, where you could take your assets, gold and jewelry, you could put them in an alternative banking system, which was the security was enforced via Hezbollah, and you could get an interest-free Islamic compliant loan by using your gold and jewelry as assets. And this circumvented the Central Bank of Lebanon and the IMF debt dependency. And so the Lebanese government and Lebanese army was taken over by the American system, the IMF system, and USAID infrastructure. We then had the alternative invasion by Israel in 1982, which led to Iran backing Hezbollah, which was a resistance against the Israeli invasion. And so Lebanon, in a proxy war, in a civil war, ended up stuck between US and Iran with various forces, Israel being funded by US and Hezbollah being funded by Iran. And so you ended up where Hezbollah, with the support of Iran, became more powerful than the US army that was funded by 250 million of US. And so you ended up in this proxy war between US and Iran with Lebanon. Now, what is Lebanon important for? The legacy drug trafficking routes as well, the strategic ports that came from the old systems when the Shah was in charge of Iran, that was disrupted by the revolution. And remember, in Afghanistan, the Taliban was a resistance against the drug trafficking routes. And then the Taliban, via the Afghan war or 20-year war of MIC, which was very profitable for FIC, ended up with a Taliban that would support the drug trafficking and the opium, which led back to the original opium wars of the British Empire in Hong Kong through Indian routes. And so you start to see how this stuff all comes together. So bringing it back, let's have a look at what happened this week. So I'll give a quick recap of the Iran situation, why you don't need to follow all the details anymore, because I think nothing stops this train. We've already analyzed where I think this goes and why Lebanon becomes important. And then we'll tie this together into the updates. And so where are we right now? Well, the Strait of Hormuz is open, but severely more around Iran exporting to China as the main shipments. And so the headlines, what are we getting right now? That the US and Iran have agreed to stop firing across the Strait of Hormuz. That was the first thing that was announced. Then we had commercial shipping resuming. And so that crashed the price of oil back down. Markets got back to usual. We had the off-ramps narrative. Then we had that talks are happening in Doha, in Qatar. Then we had a framework that follows the June the 16th Memorandum of Understanding and a 14-part plan and agreement that led to the signing of the MOU. Now, what happened next? Well, allegedly, we had Iran, which projected on one of the cargo ships. And so people were speculating, is the MOU over? Does the agreement follow? I was saying, yes, nothing stops this train. It was happening before the war, during the war, and it will continue after the war. The US responds with basically a bunch of, strikes that were either coordinated or not. Iran fires on US bases, but there was no meaningful damage. And so you start to get more bases or destruction. And then everything moved over, everything continues, but Israel and Lebanon sign a framework in the midst of all of that. And so you got the heightening up of narratives between Israel and America, the good cop, bad cop process. You got the same with Iran signing a deal that started with Israel starting the war, but America signing the MOU without Israel. And so Israel escalates with Lebanon. This was all part of the projections that we said. Hezbollah and Israel can continue to strategically weaken each other. And then Hezbollah, so we were told that the Lebanese government has signed an agreement with Israel and another 14-point plan. And then Hezbollah rejects it. And so Israel strikes Hezbollah again, and we get more, which has never really stopped. But also they're pushing out their civilian targets to try and get the reaction, as Israel always does. But the market's verdict throughout this whole thing is ignore the headlines. Because if you were looking at the markets, and remember, throughout this whole war, I was saying every taco from Trump happens when the 30-year yield gets to 5%, the 10-year yield on US bonds gets to 4.5%, and then oil was always in this bounded theater. As soon as it gets above, $115, but then the higher price of the actual physical rather than just the futures, then you get taco and coordinated taco across both Iran factions of power and Israeli factions. And American factions of power. So oil is the telltale in this. And so Brent right now is around $71. The market, those in the real know that are trading this oil, they know that this is leading to an agreement. And WTI, so you had Brent crude is around $71. WTI is under $70. That's down roughly, 13 to 15% over the last 2 weeks alone. So that means that things are holding. And what's happening with gold? Gold is lower. If this was going to be a war, then gold would be moving higher significantly, and oil would be as well if the market believed it. So, volatility is kind of subdued as well. It's nothing like the volatility that we had. And why it matters is because, the market believes that if the market believed that Hormuz was closing, then oil would be above that $90 mark. And so the oil does not believe it. The oil market does not believe it. The market doesn't believe it. And so that's what you need, what we've been following. And then that allows you to say, well, do I need to fall for every detail? Because you can see where we're moving directionally. Markets are pricing de-escalation and that this deal will move to a radically different market. You even started to see the dollar come off its all-time highs. And you started, in DXY, there was a bit more weakness. It's still above the $100 mark, not down to the 96 mark it was prior to the war. But we started to see that coming down. And so it's capital that tells us the truth when the politicians are lying. And that's how we can look at a bit of coordinated theater, whether we get the diagnosis correct or right. We can see directionally where this is happening. So the reason that I think that this will hold, why it hasn't in the past, is because this is not a MIC-dominated model where Israel has the Greater Israel Project in order to agitate the region. We are moving towards that regional stability because the order has changed, because of China, because of everything we've covered over the years. So nobody wants a regional war. Let's look at the United States. What does the United States want here? Well, they want stability because they're focused on the stock market, fiscal dominance. They want shipping lanes to open up because the own nothing and be happy, the pricing event, that's done. We're going to start to see more of the supply chain issues come through. But I believe this was bounded escalation. So I originally thought this would be a 12-day war, 2 weeks like before. Instead, it was a 4-week war, so 2 weeks extra. Then we had 60 days of on-off and craziness where I was saying a deal would be done. We got to a deal being done or an MOU. Then we got a 60-day process to lead to an actual deal. But US needs to focus elsewhere at this side as well. And so does Mick, Fick, and Tick, because they were bounded escalation throughout the whole thing. They've negotiated their deals and they're resetting the order and negotiating the fixed side within the next 60 days. Next, what does Iran want? Well, Iran wants sanction relief. That's why the resistance was funded in the first place, because that gives you leverage in order to negotiate sanctions relief. If you're buying into just the ideological argument, which is what recruits all the army and the ideology that allows it to happen, then you'll be getting the wrong side of the story right now, because this was leverage for sanction relief, as we always covered. They now need reconstruction investment. That comes from China, and that comes from the 300 billion Gulf, most likely. We'll see. And so FIC wants to try and get as much of it as it can. And so it needs reconstruction right now, because that's the purpose of this. Integration again. And then we move to the toll model with the Strait of Hormuz, which then sets the order for all the strategic choke points in line with multipolarity. And so Iran at this stage doesn't prolong from conflict. It's only those that benefit from the MIC in Iran, in Israel, and in America that may have some holdout power, but I believe most of it's gone. And so we're at the negotiation and the fixed stage. What does the GCC want? Well, the GCC wants stability. They want to open up the Strait of Hormuz, and they want to deploy their capital. They want to use their capital to get what they want. And so they want to invest in reconstruction. There's a lot of reconstruction. There's Gaza, there's Lebanon, there's Iran, there's the entire Levant, there's Syria. And so rather than investing that in the West via the petrodollar, you invest it in the region. Then UAE comes out of OPEC, you get the FX swap line, you break the petrodollar, Japan goes eastwards, and Europe starts to, the relationship between Europe via stablecoins and CBDCs changes the euro dollar. That changes that world order that we're transitioning to in multipolarity. Now, what do China and India want? The two largest economies with in the Asia region, both members of BRICS. They need uninterrupted energy flows, and they want to deploy capital into their Belt and Roads initiative, and they want to benefit from regional stability. They want Iran and Saudi normalized. They don't want anyone with all the power. They don't want world reserve currency, because they've got gold to make sure that, because they want a weaker currency for their exports. So their currency is strengthened by holding gold, weakened by deliberately to try and manage the exports. And so they don't want to do what America did, where you strengthen your currency, become world reserve currency, and then you have to export debt, and you have to become an import, and you have to have a fiscal deficit, and you have to have a trade deficit, and then private sector takes over and financializes, securitizes, goes through the whole same thing. China doesn't want that. And so they want regional stability, but they want their partners, UAE, Saudi, Qatar, Iran, to have parts of the petro yuan and petro dollar so that they can manage those flows. And so does the Middle East people want Gulf countries and Iran, and that's why they signed the security pact that we've been talking about with Turkey, Pakistan, Egypt, and financed by Saudi Arabia. And so China will benefit from regional stability as this. So the conclusion is that the escalation remains, controlled. As disgusting as that is, when I put my humanitarian hat on. Following the money in geopolitics, I can talk like that. Humanitarian, these are crimes against humanity that the MIC is trying to make up for the lost profits, get their final parts before they make up for the lost profits in Europe, civil unrest internally, and Central and South America. But the pressure continues. And so the reason that I don't follow every detail right now is because full-scale war doesn't really benefit anybody. And so Lebanon is kind of the last part. And so the bigger picture that we just need to look at and we need to follow is what happened, Well, basically, let's look at what people see. So people see something that looks like carnage, something that looks like Israel ruling the world, something that looks like the Greater Israel Project, something that looks like Israel controlling US, old empire world, okay? Most people either see that or they see it clearly. But they see that Hezbollah has rejected the agreement. Israel remains inside Lebanon. And so you've got that Greater Israel Project narrative, and you've got the Iran narrative with Hezbollah still there. Now, what most people are focusing on is that this is going to break out into civil war. So you get the media covering civil war warnings. You've got the narrative from every side saying we're going to go into civil war. Why? Because Lebanon was in civil war under the US covert operations that I covered earlier, under the IMF and USAID. And so everyone's focused on regional escalation. But what I think is actually happening is that Lebanon is effectively at the governmental level terminating from any type of policies that involve Hezbollah as a militia into integration into the state. And so we're moving from militia politics to state politics. That's what we saw in Yemen. That's what we've seen everywhere across the region. And the reason it works is because the strategic tension between US and Iran as the MIC narrative is no longer there. And so a lot of the attention has been on the prime minister, sorry, I forget whether it's president or prime minister, Aoun in Lebanon. And so Aoun is basically building the state here. And this was covered by Cold State Capital, a great article by Evan, and summarizing some of the thoughts in terms of where this actually goes in terms of what people think versus where it seems to be going, is that Aoun is actually building back the state because Hezbollah is gradually, in a way that doesn't create a civil war, losing its military role. So at the highest level, there'll be Iran that has agreed to that, and Hezbollah will go on their own track in order to try and manage their future. And then lower down, you can't have this leading into a civil war. Now, what is happening here effectively is that Iranian capital, which funded Hezbollah, and US capital, which funded the Lebanese government, is being replaced by the Gulf regional order as well. And so this is military insurance by the Gulf, and they want to invest financial capital afterwards, but they don't want to invest financial capital into something that's going to go back into war. And so this is all the financial integration replacing proxy warfare, but it takes time because you can't have civil unrest or civil war. And so this is the transition that I think is, kind of like what happened in Syria. It's very difficult to manage, but everyone was thinking based upon old thinking that something else is going to happen. So Aoun, the president, basically signed that agreement with Israel. Now, that's a horrible agreement. Who wants to sign an agreement with Israel? And so, but this is what I interpret the transition to that state. And so this is, not in the agreement. They didn't surrender territory, but they signed a framework instead. And we know how Israel negotiates. They take territory, they kill civilians, they try and spike a response, and then they negotiate with that territory. But this agreement creates a pathway into that track. And remember what I was projecting, that the Iran one would sign an MOU, then you would have a holdout negotiation that would take to a new negotiation track. This represents that negotiation track. And when it's ready to hold, like it can hold in Iran, you just get international guarantees and you get diplomatic leverage, which is what I think is being negotiated right here. Now, there was a conditional Israeli withdrawal built into the agreement that sets the architecture. There is, no agreement that is completely permanent occupation. And so this looks like, an anti-resistance agreement. And so people were thinking Iran will resist against that, then Hezbollah will resist against that, and then you create strategic tension and you go to civil war. But what this does is it puts in a continual economic collapse, which is the lever points that allow for the outside players to make it happen. But if there was no agreement, you would get significant economic collapse, civil war, no diplomatic process, and then that would vassalize Lebanon deeper and deeper into the IMF, with Hezbollah and Iran going deeper and deeper and deeper. And so what I think is happening is the change here, and this represents a change, and it's very hard because there was built into the agreement a recovery territory. And this recovery territory looks like giving up territory to Israel. And maybe in the end, a little part of the territory will go back to Israel, which looks like the Greater Israel Project. But this is statehood. This is expelling Israel, expelling Iranian financial forces, expelling Israel military forces, and then expelling US financial forces and replacing it with Gulf. So the recovered territory is basically being negotiated through diplomacy. This is a change in model. This is really, I think, regional integration. And that's what I think is happening. They're negotiating Syria, they're negotiating Gaza, they're negotiating Lebanon, and they're doing it all at the same time into one architecture. So it's not another unwinnable war that leads to civil unrest, that leads to more IMF and more of the same. I think this is differently. And this is Hezbollah basically doing a public rejection, but there is a quiet adoption. And that's been happening over time already. You've got a political side of Hezbollah and a military side of Hezbollah. And Hezbollah were already started to be integrated into the government. And this represents that negotiation basically the terms of what an integration into Hezbollah, into the army and the regional process actually looks like. And so in order for Hezbollah to have as much negotiation leverage, they need to continue protecting their political relevance. And so it will look messy and it will get messy. But this is a bigger shift, which is, I believe, we're seeing Iran reducing its proxy strategy. This is Hezbollah gradually becoming political rather than military. And this is the Lebanese army becoming sovereign authority with a stronger army by integrating with Hezbollah rather than being funded by US. This then leads to reconstruction capital, which will be replacing the military funding. And that takes time. And that's these are the final parts of who's got all the leverage in this. And we'll see that by the end deal. So this is Iran's strategic shift. This is why they funded resistance in order to get sanction relief. And this is why the Iran deal leads to sanction relief, to open up the market that then requires the reconstruction investment, that requires the expulsion of the US, which required the taking out of the territory in the Gulf countries. So my long-term thesis is that Iran is exiting the proxy model. This is in line with Evans' predictions at Cold State Capital. Regional integration is being replaced by basically reconstruction, which replaces resistance. And that requires GCC investment and BRICS integration. And so that is the economic normalization that I think we're witnessing. And kind of Lebanon is the final test of this model. It's held up everywhere else. It's holding, and then it needs the investment model to prevail. And so we've got Hamas has been weakened. Syria has been completely changed. Iraq militias basically institutionalized into this model. The Houthis have been contained and signed agreements with Saudi. And Hezbollah becomes kind of the final transition and the hardest one and the strongest one. And so that's why it's going to take a bit more time. But what are they doing simultaneously? Well, they're building up. They don't want this to become sectarian and the Shia community is represented by Hezbollah. And so we're starting to see a narrative and alternative Shia communities that are against Hezbollah being built up. Now, most people interpreting that as civil war. I think there's a slight important distinction here. This is not an anti-Shia movement. This, I believe, is a mechanism for creating a group so that when Hezbollah integrates, it's not interpreted as an anti-Shia civil unrest proxy campaign. It's just a post Hezbollah, and it gives an off-ramp for those that want to join the alternative Shia army integration and political integration, which is what I believe is emerging right now. This means that if the Iran funding is pulling and the American funding is being pulled via USAID, then you need alternative funding investing in order to take all of those people because it was a genuine resistance. It's Lebanese people. It was just funded and supported by Iran. And it was genuinely against the Israel invasion of Lebanon. But you need to replace all these people with jobs, reconstruction contracts, services, state institutions, state infrastructure. And so this is the alternative political Shia movement that I think is an attempt to being built here. And I expect that Hezbollah remains politically active. The Lebanese army becomes expanded gradually and more powerful gradually. And I don't think this is going to go to a civil war. This will be low level, Israeli strikes will probably continue. But eventually it will lead to Fiqh dominance rather than the MIC radicalized faction of Israel dominance as well. And then, as I said, the end game is that when Gulf starts financing the reconstruction, that's when you know that we get there. This will then lead to the currency being stabilized so that the alternative financial system can be built and the economy can then slowly recover with those alternative financial rails. Now, what's interesting is during the war with Israel and Lebanon, remember I talked about the alternative banking system where you could take your gold, take your jewelry, and get an interest-free loan against it. That became the funding source for the millions of civilians. And when Israel launched a war on Lebanon, they started destroying that infrastructure, that alternative financial system. So this implies a new financial rails. And what was it that gave that sovereign ability for the institutions to get freedom from the Lebanese Central Bank and the IMF? It was those alternative financial system that was effectively destroyed, used by 3 million Lebanese. And that was a civilian target. And that's how you know the financial rails are being rebuilt here, just as they did in Gaza as well. So I think Iran stays out from here. I don't think Iran gets involved. I think the Saudi normalization, requirements to never normalize with Israel unless there is a Palestinian state and a genuine path becomes the important holdout structure. And Lebanon is not an isolated story. I think that this happens across the region. I think this is just the final stage of dismantling the regional proxy system and the proxy wars. And military influence is basically giving away to financial influence. MIC is giving away to Fiqh, as we've always said. And reconstruction capital is reshaping and being replaced with rebuild capital. Regional integration is replacing perpetual war, the forever war model. And we still have a little bit of what happens to Iraq next. It's very institutionalized. We started to get a US exit. We will see. This is really the test of the hypothesis because it was Iran dominated. They're going through significant economic weakness right now. The closure of the Strait of Hormuz impacted Iraq more than anyone else, as well as India. And so that's the thing that we need to see. So I think in order, Lebanon, then Iraq, then Gaza, that will then lead to Sudan, and that will lead to Libya. And that's really, the resistance against the manufactured crisis and the different models that can be followed. This is MIC, Fiqh, tick in full force. This is transition from MIC forever war to Fiqh regional stability, where you have the Fiqh has to give more war in other parts of the region. So with all of that in mind, let's go to the final section. And the final section is the surprise, really. that throughout all of this carnage, through the tech crash, through the problems that we've been highlighting with MicroStrategy coming to surface, exactly as we've been covering over the years, with all these problems, with even us leading to our next internal battle with soft forks and hard forks within Bitcoin, Bitcoin is holding up incredibly well. And so, we went below that 60,000 mark. At the moment, we're around about 62,000. I was getting people to say dollar cost average into weakness. And I believe that there's extended weakness coming. But really, how it's been holding up has been pretty impressive. Its resilience, given everything that's happening, would have thought it would have been a bit more weaker, which is a shame for most people, because the weaker it gets, the more fiat currency that month, that week, that day, however you dollar cost average, you get to buy with your bit. You get the more Bitcoin you get to buy with your fiat currency. So, despite the weakness in technology stocks that we covered right at the beginning, despite the pressure across risk assets, despite Kevin Warsh's regime change and talking about rate hikes, and also hinting at inflation, and inflation potentially coming under control, now the Strait of Hormuz is open. All of that uncertainty, Bitcoin continues to hold this level. And at the same time, strategy's influence is becoming obvious. And we're going through the nice cleansing process for that right now. And so strategy, effectively, MSTR, was the largest purchaser of Bitcoin. I always framed it as an arbitrage vehicle that can use financial industrial complex, financial weapons of mass destruction in order to centralize as much Bitcoin and short-term control the price of Bitcoin and create these weapons for the FIC to control the short-term price of Bitcoin. But because there's Bitcoin in self-custody, you can't control the long-term price. And so the next test is whether Bitcoin can demonstrate its demand beyond the one corporate buyer, because we had a big announcement from strategy. I thought that the strategy would start buying back some of STRC in order to remain confident. But what it did instead is it announced that it can sell and get approved an amount of Bitcoin, a few $1 billion of Bitcoin, in order to, buy back stocks, strengthen up its dollar reserves, meet its dividend requirement and its debt requirement, and sell Bitcoin in order to do that and have this authorized. So now it's got authorization for all of the different tools. And we didn't get the announcement that strategy is buying Bitcoin. Now, this helped Stretch get closer to $100, and it created a little bit of recovery in the MSTR share price. But this, I believe, is good for Bitcoin, because now we've got all those mechanisms for the short-term price manipulation that you don't need to fall for. But we get to test it beyond this one corporate buyer. And so at the same time, we got that happening with strategy. Now, we started to ratchet up the narrative into the next phase of understanding the Bitcoin code. And we've got more and more attention towards BIP 100, which is an alternative implementation of Bitcoin that takes away the changes that allowed for a lot of the spam. I don't want to get too technical. We've covered this previously. You can look at my blog. But Core, the developers of Bitcoin, opened up the amount of data that can be put into an op return from 80 megabytes to 100,000 megabytes. And so that was, and then they changed the parameters, which has led to a lot more people creating things on Bitcoin. And that is considered spam. And now it creates more pressure on those running nodes because they have to download more data and it can get more expensive. We're back to those old debates around preserving the decentralized nature of nodes, the decentralized nature of Bitcoin mining, and the decentralization of developers. Now we're testing all those assumptions again, which is a very healthy and good thing. Now in August, there's going to be the next soft fork between BIP 100, those that were signaling on their node, whether they're supporting NOT or Core. And now we have this V30 version of Bitcoin that we currently have. And then we have this alternative implementation, BIP 110. And we get to test all the parameters. Now, my node has been signaling for NOTs. And maybe we can do more on V30 versus... I've always thought it's very healthy that we create competition within Core and we test the assumptions. We have this debate. We understand what a soft fork look like and how that is, what that leads to. And then the way the soft fork was built is you have 1 year, and then you have the reversing, and then you have this process where miners can do a reversed soft fork and hard fork structure. All of that needs to be tested, because the one we had in 2017 that led to the block size debate prior to that, that was a different structure. So I think it's very healthy. So while we've got the unwinding of this strategy structure, we've got the reversal of and the implementation of this new soft fork, hard fork structure. These are very good things for Bitcoin long term, but bad for short term optics. And so I'm continuing to believe that we get extended weakness, even though it's holding up here, which allows you to get more Bitcoin in self-custody as you're earning your fiat currency. And so, we've got this 1 year learning process that we're going to go through, and we'll be covering it all the way through. We'll understand the bigger picture. But the bigger picture here is that Bitcoin needs to prove that the market is deeper than just one corporate balance sheet and one FIC vehicle that can be penetrated by FIC. And we need to know that Bitcoin Core has competing teams. And when we need to regime change, we regime change. And we question the financing mechanisms. And we question those that were involved in compromise operations. And this is the healthiest Bitcoin has ever been in terms of questioning those things. But if you're kind of new to it, you just see carnage. And so that's really good thing for the long term, as I said. The long-term adoption requires more broad ownership. Now, it's not proof of stake, it's proof of work, so fine. But the less Bitcoin that was centralized in FIC, the less short-term price manipulation. And I've covered in my blog how Jane Street does this and various other things. You can go back to those old episodes. But the most important thing with Bitcoin, the thing that makes it different, is its decentralization spectrum. And, that happens in different areas. It happens with lots of people running nodes and those nodes enforcing the code against any developers that want to change the code. It has competing implementations and a decentralized developer infrastructure with competing funding sources and competing ideologies. We're moving more to that than developer. We were very centralized in the core structure. And more decentralized innovation in mining. So the more AI companies in America that are moving from Bitcoin mining to AI infrastructure, and we had one of the companies like Ionic Digital, which I'm a shareholder in from the Celsius bankruptcy, where that's now going public and it filed its S1 filing, and it's no longer a Bitcoin mining company other than having Bitcoin on its reserve as an asset and mining Bitcoin with what's left, but it's pivoted to AI infrastructure. So the more public companies, and a lot of the companies that are public Bitcoin miners have pivoted to that, we get a correction in the difficulty rate, but Bitcoin mining difficult rate is still at very high rates, very, very secure, more secure than everything, but more is pivoted over to AI, which then decentralizes that 40% of mining infrastructure that was happening via FIC public companies in America, while accelerating into multipolarity with other countries revealing their Bitcoin strategies, like Iran with its nuclear Bitcoin mining, and the largest, and UAE as well, with its new things. So this is very, very positive while we get the innovation through alternative implementations of Bitcoin to have more control over self-mining, home mining, parameters for integrating into the Bitcoin mining pools. All of that is progressing, but we've got to get through this debate over the next year. And it will look like a bit of carnage and a bit of an open source boardroom. So have a strategy. And I don't mean strategy. I mean your strategy. The problem is MSTR co-opted that word. And so I've argued for a long term that strategy is a arbitrage vehicle, not a Bitcoin accumulation vehicle. It centralizes Bitcoin and it creates arbitrage FIC vehicles. And the lesson that I was, the whole lesson here is never really about one company. People always wanted me to focus on Michael Saylor. Now, if you look back at some of the contracts, Strategy was a long-term public company. It pivoted here. Michael Saylor did rise to fame very quickly. He was providing service and intelligence software. Some of those customers were governments, and they were linked to contracts that linked to intelligence agencies. But that's just the structural part of it. I never focused on Michael Saylor as a person, despite everyone trying to make me go down that route, because I was more focused on the lessons, the structure, the architecture, subordination, and Michael Saylor's fiduciary duties to his shareholders. So I'm always watching the incentives rather than the personalities. And so the lesson was understanding these incentives and following them, which is the lessons that I like to teach you. Strategy has now accumulated approximately 847,000 Bitcoin. I think it wants to own more than the Satoshi wallets, which is over 1 million Bitcoin. Now, it was financed through preference shares. It was financed through debt structures, and it was financed through, equity issuance and preference shares and more structured products. These were all structured with the FIC and still has investments with the FIC. And so while the premium existed that allowed this to happen, that allowed them to issue shares and buy Bitcoin at a discount and with a premium MNAV, and then they could buy Bitcoin. This would, sometimes increase the net asset value, but dilute the MNAV. And then they could repeat this, and keep going. Today, that premium doesn't exist. And so they're now reversing it, getting authority to sell Bitcoin so that they can pull the levers in the other way, and then they can compress that ability. So it's not buying Bitcoin anymore, which I think is very, very healthy. And strategy, its financing is becoming more and more difficult. It could never buy Bitcoin or never sell Bitcoin. It may need to, it may not get to the over 1 million side. And so I will keep watching it, but it's the architecture, it's the incentives. And Bitcoin, basically what the Bitcoin that they have right now sits below the average price that they purchased. And so, there's not really an option to sell at a discount unless you want to fire up. And I always said the risk is not Chapter 11. With all the other treasury companies, Chapter 11's the risk. But with strategy, why would they kill the vehicle? It's a much more useful vehicle to the FIC. And so I always thought that it would continue and stay there. And so we have to deal with it and understand it. So capital is becoming more and more expensive for strategy anyway. Up to $1.25 billion Bitcoin sales have now been authorized. It increased its USD reserve so it can hold out for longer in terms of the dividends without selling Bitcoin. And it can now pay those preference dividends for a longer time. It can pay its debt servicing when that debt becomes mature. And it can do more share buybacks if it chooses. Which is not a Bitcoin purchase strategy. So this is all healthy. STRC, it increased its dividend from 11.5% to 12% to try and incentivize people to arbitrage it and buy more of it. And it's built a bigger cash reserve, and that was all announced this week. So the market has questioned its sustainability. Many people have stopped the idol worshipping. Many people now understand the structure. We understand the incentives. We understand the vehicle. And there is now bigger lessons, which makes Bitcoin stronger. And hopefully that drives more and more people into Bitcoin and self-custody rather than Bitcoin wrapped in Michael Saylor and Fick, who can change things at any time and just change the game on you. And that's what Bitcoin can't do. As long as we preserve decentralized mining, people running nodes, people holding in self-custody, and more decentralized developer infrastructure, which right now is moving towards more powerful structures, more lessons as well. So, strategy, somewhere along the way, whether it was the strategy from the beginning, whether it was a covert op, whether it was co-opted, whatever it needed to pivot, whether it made good decisions, bad decisions, strategy stopped, behaving like a Bitcoin holder and somebody that was always going to buy Bitcoin. And it became a credit issuer. And a credit issuer Michael Saylor tweeted that he met with Goldman Sachs, because that's who you meet when you're a credit issuer. And credit issuers must service their liabilities. And those liabilities are normally liabilities to FIC with some retail shareholders. So that's the subordination vehicle that I've always talked about. Bitcoin holders don't have to do this. They don't have to answer to their liabilities unless they have fiat liabilities. But on the Bitcoin side, they don't. And so that's the bigger lesson. Owning Bitcoin, self-custody, and building financial products are very, very different things. Building financial products around Bitcoin, as I've always said, is not Bitcoin. Bitcoin ETF is not Bitcoin. Bitcoin IOU treasury companies is not Bitcoin. Bitcoin perpetual futures are not Bitcoin. Bitcoin shitcoins wrapped in Ethereum are not Bitcoin. The two are completely different businesses and completely different models. And the first, basically, is a FIC model. And we still dominate in self-custody. And we need to continue to watch that. So what was launched this week in order to try and make sure that more of it is centralized? Well, the FIC launched a new tool. And that is the organization that created the global financial crisis, that led in 2008 to Satoshi releasing the white paper and led to the bankruptcy of Lehman Brothers and Bear Stearns, and a product that was created by Larry Fink, who worked there, that then ended up creating BlackRock and was the net beneficiary of Barclays ETF department that gave it this asset management control and got a contract with the Federal Reserve to use this BlackRock Aladdin technology that led to packaging up and putting on the Fed balance sheet these mortgage-backed securities and toxic assets that Larry Fink invented, that Blythe Masters from JP Morgan created the credit default swap in order to insure it, so that that could then be dumped on pensioners through the asset management industry, that then required a too big to fail structure and a bailout. Fannie Mae and Freddie Mac have now decided that you can now use your Bitcoin in order to get a mortgage, and you can use your Bitcoin as collateral. And so we had the first Michigan home purchase using a mortgage issued by Fannie Mae using your Bitcoin as collateral. And when the Bitcoin is pledged as collateral, what does it mean? It means it's held in custody, which means that it is another centralizing vehicle. So you have the Bitcoin's treasury company strategy, you have the ETFs, and now you have Bitcoin-backed mortgages via Fannie Mae. This means, and it's attractive, that if you agree to take your Bitcoin out of self-custody and hold it in custody, then you don't have to sell it. But if the price of Bitcoin goes down and is manipulated down fast, you need to either put more Bitcoin so that you can have all of your Bitcoin in custody backing this loan, or they margin call you if there's not enough collateral and you end up losing all of your Bitcoin, which of course was the structure of the global financial crisis, which is the structure of the private credit financing of the AI infrastructure build out into an AI bubble, while centralizing as much Bitcoin and leveraging people up. And so while you get no capital gains are triggered and you don't have to sell it, and so there's no margin call until this actually goes below the value, you can also settle in what? You can use USDC stablecoins are accepted to do this as well. And so this is part of the nationwide rollout plan for stablecoin surveillance money with Bitcoin in custody in order to back and take out a mortgage so that you can mine some fiat currency via Fannie Mae and Freddie Mac. And they're targeting $250 million of initial volume, which isn't too much anyway. But this is all at the same time, bringing it all around where we started at the beginning, as launching the Open Stablecoin Standard, which is 140 institutions from FIC across the spectrum in order to launch this Open Stablecoin Standard. And what will they be doing with that? As I said earlier, they'll be sharing the reserves of investing it in treasuries with the businesses that adopt it. And so stablecoin is becoming the infrastructure that we talked about. Private digital money continues to expand within the US sphere of influence. And we had that CBDC standard globally. Now, I want to cover one more thing and then we'll wrap all of this up. That we got more disclosures on Trump's crypto scams and Trump's blackmail operations and Trump's quid pro quo deals. No surprise, we covered them all along. But Trump reported more than $1.5 billion in crypto-related revenue. Now, that wasn't Bitcoin. That was launching meme coins and selling them and dumping them onto his fans that wanted to buy them. Any idiots that did that, they're on the wrong side of that trade. It was meme coin royalties from things that he'd launched. It was the creation of World Liberty Financial that we've covered many times, the stable coins within it. That was in partnership with Steve Witkoff, the envoy to the Middle East, and now took investment from the UAE Sovereign Wealth Fund. And you get those quid pro quo transactions that I've talked about. It was from selling tokens. He launched his wife's meme coin, his meme coin, and lots of other NFTs. And then it was exposure to Bitcoin mining via his fund's infrastructure with the Hut 8 people. And the different AI infrastructure was some of his other stuff as well. So that was significantly more than he made anywhere else. And so that tells you how this crypto capital, what it is actually for and what it will actually do. It is the police and surveillance state. It is to centralize as much Bitcoin as possible. And it is to allow for these quid pro quo deals via stablecoin issuance to roll over the debt. It is the continuation of empowering the swamp for Mick, Fick, and Tick, and then the quid pro quo deals with the Gulf infrastructure that invested in Affinity Capital Partners, Trump's family office sovereign wealth fund. Not sovereign wealth, so family office funds. Okay, so let's pile this together into the final thoughts. The common thread across all of this, whether it's the technology, whether it's immigration, whether it's digital money, whether it's the Lebanon war, whether it's stable coins, whether it's Bitcoin, on the surface, they all look completely different and unrelated. But at Simon Dixon Hard Talk Live, we don't think like that. We try and follow the money and we see whether there is commonality in the big things and what we can learn from it. And so they are all connected in some way. And they are expressions of the same transition. One transition, one where effectively financial and technology power increasingly replace military power, while the military power becomes AI and robotics and cybersecurity. Capital and surveillance are increasingly replacing human-led conflict and war. Digital infrastructure is increasingly replacing the legacy institutions, and they're being redefined and rebuilt into multipolarity and a global control grid. And so the question isn't really simply, what happened this week, as I always cover. It's what system is being built. And that's why we want to cover and look at the systemic level and follow the money for the incentives. Because once you can recognize that, the headlines become just irrelevant and you don't get caught up in all the fake news and where they want you to go. And everything makes a lot more sense and you can de-radicalize yourself from the psyops. And this really helps me transition to part 2. Because in part 2, that's really what we want to cover. And it covers, it leads perfectly into the featured interview that I did earlier this week. And so I was joined and I was invited onto a YouTube channel by Alexei Jozanov. And that is the Gold Republic Global YouTube channel. What we basically went through and I described is the asset stripping phase. So how, when you manufacture these crises, how you can take these into weapons and the specific asset stripping ones, how you turn that into asset strips. And so rather than looking at the individual events and being a part of the PSYOP and the algorithm, you can step back and you can, we basically went through the incentives and we went into the actual transition itself. So here's what we're going to do. we're going to be premiering that video on my YouTube channel shortly. It will redirect you. The link will be below and it will be premiering shortly after this. But we're going to be jumping into the interview. But just before we do, I'd like you to do a few things for me. Firstly, check whether you are subscribed to this channel. And if you are subscribed, make sure it's on all so you get notifications. We're at 175,000 YouTube subscribers. I'd like to get to 210,000 in commemoration of 21 million Bitcoin. And I'd like you to help me get there. So if you're not subscribed, I will keep giving this content and I will make sure that it's got no ads, no monetization, no sponsorship, and I'm not upselling you into some kind of business model. I will continue to do that, but I notice way more people are watching this than are subscribed. So if everyone that watched this subscribed, then we can keep doing this content and you can keep enjoying this as well. And we get the message out to more people. The other thing I'd like you to do, in case I ever get taken down, head over to Rumble and look me up and follow me over there. That's our backup channel. I stream over there. But if I get taken off YouTube, we'll be streaming over there. I also do it on X where I give real-time analysis. If you're not following me on X, at Simon Dixon Twit, please follow me. And please put the notifications on so that you get those notifications. If you need to watch this on the move and you prefer to download it and watch it in parts, then we've got Spotify and Apple Podcasts. Please look me up over there and make sure you follow me. We need to get more followers because the YouTube numbers are much higher. So please, if you use Apple Podcasts and use Spotify, please help out over there. Finally, make sure you have a free login at simondixon.com. In case everything gets shut down, we've created our own environment. And the only way, in case I get completely cancelled, that I can notify you and we can continue this is if I have my own environment for hosting webinars, completely free, no sponsorship, no upsell, no monetization. If you've got a free login at simondixon.com, as a reward, you can get a free copy of my last book. I'm going to be writing my next one. That will be our environment. And I've got content there and archives that you can't get anywhere else. So create a login for yourself at simondixon.com, become a member, and other community members all talk and they discuss what they're doing for their sovereign strategies. You can talk amongst other community members within that. That's everything that I'm going to ask. So if you are, once you've got that login, then all I'll do is I'll email you each week so I can notify you. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked. Others are going to do very well. I want you to be on the right side of that change, and I want more in my community that are on the right side of that change, that can see above the psyops, so that maybe we, at least us in our community, can transition with a bit more peace, love, and unity. And so this is everything that I'm going to be covering on Simon Dixon Hard Talk Live Part 1. We covered immigration as a weapon. We covered Lebanon as a weapon. We covered the tech crash, and then we went through some of the updates this week and in Bitcoin. Now, head over to Part 2. Enjoy the interview that I did on the asset stripping phase, and I will see you this time next week. Peace.